Welcome to our end of your finance update. Last Monday, December 19th, the U.S. market saw a decline, with both financial institutions and tech firms feeling the impact. This is expected to result in the major indices finishing December down, which is a rare occurrence. Historically speaking, since 1928, only 27% of Decembers have seen a decrease in the S&P 500, according to Dow Jones market data. However, the S&P 500 saw a drop of 6.4% at Monday's close in December. There are a number of reasons behind the pressure on the markets. Despite recent progress in the fight against inflation, central bankers around the world have warned that they will need to keep interest rates at higher levels for longer. Retail sales data in the U.S. have also sparked concerns that consumers are starting to feel the effects of inflation and rising borrowing costs. Additionally, there are questions about China's recent easing of pandemic restrictions due to an increase in COVID-19 cases there. As Susanna Streeter, senior investing and markets analyst at Hargreaves Lansdown, noted, there is still so much anxiety overhanging markets about the never-ending COVID story and the worry about a harsh landing owing to rate hikes. Even if there is a year-end rally, it is likely to fail due to these persistent concerns. The Dow Jones Industrial Average dropped 162.92 points, or 0.5%, to 32,757.54, while the S&P 500 dropped 34.70 points, or 0.9%, to 3,817.66. To 10,546.03, the Nasdaq Composite fell 115.938 points or 1.5%. In general, stocks declined on Monday, with the S&P 500 10 out of 11 sectors finishing the day lower, after being accused of antitrust charges related to its marketplace service by the European Union. Facebook's parent company Meta Platforms saw a $4.95, or 4.1%, drop to $114.48. Walt Disney's stock dropped $4.30, or 4.8%, to $85.78 after the studio's most recent movie, Avatar: The Way of Water, failed to make as much money as anticipated over its opening weekend. The selling of government bonds also hurt them. The Federal Reserve's interest rate rises have caused U.S. bond yields to jump this year. The yield on 10-year Treasuries increased from 3.481% on Friday to 3.581%. With falling prices, yields climb. The American currency continued to decline. The currency's value was measured using the WSJ Dollar Index, which fell 0.1% against a basket of its rivals. It's still on course to finish the year up about 9%. Brent crude prices increased by 1% to $79.80 per barrel on the commodity markets. Oil prices have fluctuated as investors weigh indications that other big economies are slowing, with hopes that China's reopening will increase demand. Overseas stocks were mixed. The FTSE 100 in the United Kingdom increased by 0.4%, while the global stocks Europe 600 increased by 0.3%. The Shanghai Composite dropped 1.9% as worries about COVID-19 outbreaks increased. The Hang Seng Index in Hong Kong dropped 0.5%, while the Nikkei Index in Japan plummeted 1.1%. Here's hoping we're bottoming out. Do you think there'll be a start of year rally? Let us know in the comments. Until next time, remember to like and subscribe in order to maximize your wealth and minimize your financial stress.